Wirecard was founded in Munich in 1999 to process online payments for merchants that mainstream banks refused to serve: gambling platforms, adult content websites, and other high-risk operators. That niche gave it a head start in a rapidly expanding digital payments market. By 2018, Wirecard had grown into one of Germany's most celebrated technology companies, with operations in more than 40 countries. In September 2018, it was added to the DAX 30, the index of Germany's 30 largest listed companies, replacing the venerable Commerzbank. At its peak, Wirecard's market capitalization exceeded 24 billion euros, making it more valuable than Deutsche Bank. At the center of Wirecard's business was a structure it called third-party acquirers, or TPAs. Wirecard claimed that in markets where it lacked local payment processing licenses, it partnered with Asian intermediaries who handled transactions on its behalf. Those TPA partners then held large escrow balances for Wirecard, which the company recorded as cash assets on its balance sheet. Over time, those claimed escrow balances grew to represent a substantial share of the entire company's reported assets. The structure, as analysts and investigators later concluded, made the balances nearly impossible to verify from the outside through normal audit procedures. Financial Times journalist Dan McCrum began investigating Wirecard as early as 2015, publishing questions about accounting irregularities in its Asian operations. In January 2019, McCrum and colleagues published a report based on internal documents suggesting that transactions in Wirecard's Singapore office had been fabricated to inflate revenues, a process sometimes called round-tripping. Wirecard denied the allegations vigorously and called the reporting inaccurate. The company's share price dropped sharply on the day of publication and then recovered as management rebutted the story and retail investors who had become loyal to the stock held firm. What happened next was extraordinary. Rather than opening a formal investigation into Wirecard's accounts, Germany's financial regulator, the Bundesanstalt für Finanzdienstleistungsaufsicht, known as BaFin, filed a criminal complaint in February 2019 against McCrum and a colleague, citing suspected market manipulation. BaFin also imposed a temporary ban on short-selling Wirecard shares, a rare and aggressive regulatory tool. Critics at the time, and in subsequent parliamentary investigations, argued this amounted to the regulator shielding the company from legitimate scrutiny. BaFin maintained that it had acted on evidence suggesting short sellers were coordinating with journalists to drive the share price down. No charges against the journalists were ever brought. During the same period, hedge fund managers who had bet against Wirecard faced legal threats and reputational attacks. Wirecard and its allies portrayed its critics as participants in a coordinated manipulation scheme. Several short sellers received warnings from German authorities or became subjects of investigations. German business media widely repeated the narrative that Wirecard was a victim of financial attack rather than a subject of legitimate scrutiny. For a time, that framing succeeded. Wirecard's share price climbed, short sellers lost money, and the story appeared to be settled in the company's favor. Ernst & Young, known as EY, had audited Wirecard since approximately 2009 and issued unqualified audit opinions every year, meaning it certified each year that it found no material misstatements in the accounts. The escrow balances recorded by Wirecard grew steadily on the balance sheet through that period. According to the findings of a subsequent Bundestag investigation committee, EY had for years accepted documentation that was channeled through Wirecard and its TPA intermediaries rather than independently confirming the balances directly with the custodian banks. EY has publicly stated that it was itself a victim of an elaborate fraud involving falsified documents and collusive misrepresentations by multiple parties, and German courts continue to examine the question of auditor liability. Under sustained pressure from institutional shareholders and continued reporting, Wirecard's supervisory board commissioned KPMG to conduct a special independent audit, the results of which were published in April 2020. KPMG's findings were damaging in what they failed to confirm. The firm stated that it was unable to verify the existence of the TPA escrow balances because Wirecard had not supplied the necessary third-party documentation. KPMG did not conclude outright that the balances were fraudulent. It stated it could not confirm them. The implication was enough to send the share price sharply lower, but the company still had not admitted to any wrongdoing. In early June 2020, EY took the step it had not previously taken. It contacted BDO Unibank and Bank of the Philippine Islands directly, without going through Wirecard's channels, to confirm the escrow balances. Both banks stated that Wirecard held no accounts of the described size with them. The Banco Central Enja Pilipinas, the Philippine Central Bank, subsequently confirmed that the supposed trustee, a Filipino attorney named Mark Tolentino, was not holding funds on Wirecard's behalf. The 1.9 billion euros recorded on the balance sheet did not exist. On June 18, 2020, Wirecard disclosed this publicly. Its share price fell more than 60% in a single trading session. CEO Markus Braun resigned on June 19, 2020. On June 22, 2020, German authorities arrested him on suspicion of accounting fraud and market manipulation. On June 25, 2020, Wirecard filed for insolvency protection at a Munich court. becoming, according to contemporaneous reporting, the first DAX-listed company to do so while still a member of the index. Chief Operating Officer John Marsalek, who had overseen the TPA relationships and whom prosecutors believe was the operational architect of the fraud, had vanished days earlier. He was last publicly placed in Minsk, Belarus. German prosecutors believe he subsequently fled to Russia, where he is believed to remain a fugitive at the time this episode was produced. The Wirecard collapse triggered a significant political and regulatory crisis in Germany. A Bundestag Special Investigative Committee documented how BaFin had failed to act on repeated public warnings over multiple years. BaFin's president Felix Hufeld resigned in January 2021 following the committee's findings. The German government subsequently enacted legislation strengthening BaFin's authority to investigate suspected accounting fraud at listed companies, a function it had previously lacked in full. The European Securities and Markets Authority issued a peer review critical of BaFin's supervision of Wirecard and recommended improvements to Germany's enforcement framework. Several elements combined to let the fraud persist. The TPA structure placed claim to assets one step removed from direct verification. BaFin's posture toward critics, particularly its complaint against the FT journalists, signaled to the market that the regulator stood behind the company. Wirecard's DAX membership conferred a further layer of institutional legitimacy. Some researchers in auditing and corporate governance argue that auditors face structural commercial pressure to preserve client relationships and that demanding independent confirmations can be perceived as a sign of mistrust. Whether that dynamic influenced EY's approach is contested, I disputes it, and courts are still examining the facts. What is not contested is that the formal verification step, contacting the banks directly, was not taken until the fraud was already near its end. Wirecard was a company listed on a major national index, audited annually by one of the world's largest accounting firms, and regulated by a national authority. None of those layers caught a fraud that journalists and short sellers identified through public documents and on-the-ground reporting. This does not mean every public company is suspect. What it illustrates is a pattern that runs through financial history. Institutional endorsement and prestigious credentials can coexist with material misrepresentation, sometimes for years. For anyone who pays attention to where their savings are invested, it is worth knowing that the layers of oversight between a company's claims and your capital are only as strong as the independence of the people operating them.